Hello, everyone. As expected, we got into 2-month outputs at 455.30. It's currently up pretty nicely. So the plan, like I was saying, was we're going to get into 2-month outputs. As we get a little higher, we're going to go ahead and get into a little closer dated puts, probably a month, month and a half. And then as we get to maybe 462, 463, that's when we can probably start putting the foot to the gas just a bit in terms of aggression, the downside. All right. So unfortunately, in terms of price action wise, it was a pretty flat day. The yields, the dollar, the VIX, all of these things are giving a bit of a we're going to take a look at everything. All right. We're going to take a look at the SP 500, the Nasdaq, the Russell, the dollar, the bonds, the VIX, all that good stuff. All right. So without further ado, let's get started with the video. Okay. So here's a chart of the yields. We know that the yields have an inverse relationship to the market, 10-year yield, meaning when the yields are doing well, the market should be falling. So we can see that we started to break outside of this falling wedge. Falling wedges are extremely bullish patterns. We started to break outside of it, but then we about faced, fell right back down inside of the falling wedge. So that sort of stopped the bullish momentum of the yields. And obviously, if this begins to fall a bit more, then that means that the market has more room to go to the upside since there is a negative correlation, right? So there's that for the yields. I mean, that's all there is to look at. All right, next, let's go ahead and take a look at the VIX. The VIX also has an inverse relationship to the market. $13 is a very, very important level on the. If we can break above 13 and above 13.50 on the VIX, then that will be bearish for the overall market. And as we know, the VIX also has an inverse relationship to the market. When the VIX is doing well, the overall market is falling. So this is another day where you can see, we bounced off of this downtrend line. This is a falling wedge. This is a very, very bullish pattern. So we bounced a bit, right? But then intraday, we fell even lower. So currently, the VIX is up for the day, right? Now we just need to see if the VIX can hold and finally break above 13. This week is going to be very, very interesting to see what ends up happening with the VIX and the yields as well. All right, next, let's go ahead and take a look at the dollar. So the dollar, this is also has an inverse relationship to the market generally. So if the dollar is rising, then that is bearish for the overall market. And as we can see, the dollar ended up making almost made another low. It had a red day today. It doesn't look very strong. And it is adhering to these levels for this falling wedge very, very well. So as we know, falling wedges are bullish, right? The yields, the VIX, and the dollar all basically have falling wedges on them. So this is showing that the dollar has a bit more room to go down here to 102.50 potentially in the next few days, 102.55. So we can still fall lower on the dollar, and essentially that would be bearish. That would be very bullish for the market, and our puts would not do well in that instant. So it's going to be interesting to see what ends up. So here's the thing: what usually ends up happening is when things look extremely, extremely bearish, that's when the market ends up getting a reversal because they don't want retail to be correct, right? So if they're painting a very, very bearish picture, I would be surprised if they continue it in that same direction. So what I'm expecting is we should get we could get a retest to this downtrend level of the dollar that we've been creating. From here, wherever we touch it, we should bounce off. And how far we bounce off is going to be interesting because we could always just touch it, bounce a bit, right? And then make another low. And then from here, we can end up bouncing. So this is probable. This is something that could end up happening in terms of market makers and everything. So that's why at this point in the market, while the equities are this high and while the SPY is this high here, I don't know if we can end up making another high. That's why the safest bet was to get into puts for 2 months out. And as we can also see when we're looking at the chart of the SPX, this is a rising wedge holding this level of resistance really, really well. So to be bullish here is very, very it's really, really risky bullish here. So it is what it is. Essentially the real key levels moving forward is, say for example, right now, first of all, it's tough to see how long we're going to maintain in this range. We could still, this range meaning 452 to 455, right? How long are we going to stay in this range? Very, very tough to tell, right? But if we, the main level of support to the downside is 452. If we could break below 452, then there's 450. And then the big one below that is 447. So, that's going to be really, really interesting to see what ends up happening. And at this point, a lot of the indicators are giving mixed signals. For example, right, we just looked at the dollar, the VIX yields, right? They're giving a bit of mixed signals. The dollar can still fall a bit lower. The yields can still fall a bit lower. The VIX showing a little strength, right? So they're not all uniform in terms of whether they're showing bullish or bearish. All right. All right. I just muted WhatsApp. That shouldn't be a problem anymore. The other thing that I want to show you guys is Nvidia. So I was showing how Nvidia breaking below this trend line was going to be potentially bearish for the market. And as you can see, it is also holding this trend line and it bounced a bit. Similar to what it was doing back here in the beginning of, in the middle of September, in the beginning of that bounce that we had, right? So once again, we're back to this level. We're holding it as support. This trend line is very, very important. So we're going to have to see if Nvidia can maintain this and show strength. But if this starts to close below, and then if it closes below 460, that I don't see how that's going to be bullish for the overall market. And essentially, the rest of the tech stocks, they're all basically not showing too much clear signals either. Take a look at everything. Microsoft, it's right at highs. Apple, not showing it. It's technically it's at a level of support we can bounce off of 188.50. Tesla consolidating once again, nothing too special here. Meta, also at a level of support. So going short on this level of support at 334.50 is not really that safe. Amazon is showing strength. It showed some strength, but it wicked upwards. And Google doesn't look that great. This is not like a great candle setup, but once again, you can see that we're holding this level of support from Friday's low, and we closed above the lows from last Friday and Monday. So, guys, like when you just look at this stuff, it's not giving clear-cut direction. None of this stuff is giving clear-cut direction. It's really, really difficult to be bullish, and it's really, really difficult to be bearish in the short term. So that's why, my gut is saying to be bearish. And, there's multiple reasons for that. And whether that happens today or in a week is irrelevant to us. That's why we got into the puts 2 months out. It'll give us some time. And then in the meantime, we can scalp intraday. And we can make our money daily regardless of doing that. So, I hope that makes sense. We could also just take a look at the NASDAQ and the IWM. But regardless, on the short-term time frames on the NASDAQ, things are looking like, that's why we had a bit of a bounce today. We had a falling wedge on the 1 hour on the NASDAQ here, right? So that caused a bit of a bounce. We're coming back to retest it, right? But it's tough because even on this sort of setup, we can either break lower or we can hold this level of support and bounce a bit. But that's sort of irrelevant, right? In the short-term grand scheme of things, a bit irrelevant because based off of that move, we're not going to break above 396. So, in my opinion, right? And then when you take a look at the IWM, basically an inside day. So, a lot of chop overall. This is not the time to be very, very aggressive in terms of your swings day to day. because there's no fluidity. We're at a level of resistance. The market is clearly at a level of resistance, and now it's trying to make a decision. Have you ever tried to go long at a level of resistance? Generally, when you're day trading, the answer should always be no. So it's going to be interesting to see whether we get a bit of a pullback and what happens then. All right. So yeah, the other interesting thing that we could take a look at is TLT, and I'm very bearish. I'm very bullish on TLT, and TLT is one of the main reasons why the market is also bullish. TLT is the 20-year bonds. As we know, look at the DB, he's the 30-year bond. So basically the bonds are doing well. So they're showing some bounce, and we know that the bonds have a more correlated relationship to the market. And the bonds are strong, then the overall market is strong as well. So the bonds are getting close to a level of resistance here. And then when you look at TLT, similar, also close to the level of resistance here at around 91.50. So we're getting very close to resistance. And then above 91.50, then there's the gap that needs to be filled closer to 3. So it's gonna be interesting. It's gonna be very interesting. But regardless, this is definitely not a time where you want to start entering long, because we're at levels of resistance TLT now as well. So, with that being said, lots of conflicting signals. Once again, the safest, most intelligent trade to take is 2-month outputs. Currently, those are up about 5%, 6%. Nice. And yeah, I hope you guys had a wonderful start to the week. Be sure to like, comment, subscribe, do all that good stuff, and I will see you guys bright and early tomorrow morning. Thank you.